Hi, today I thought I'd talk a little bit about 60-day lates and the bubble. Is there going to be a housing bubble and what's going on right now? So what I can tell you that 60-day lates, 2 months behind on your payments, that's not quite 3 months or 4 months, which is when you can get into the foreclosure process, but it kind of is a sign of things. And then important thing to remember is that they've given us forbearance, most people. So your incentive to pay, I think, is really dramatically reduced. Even though most people are paying, they don't have to. And for people who were very concerned about keeping cash on hand, they took advantage of that and they didn't make their payments. So I think it's a little bit convoluted. I know there's plenty of people that lost their jobs, but there's also plenty of people that tend to be homeowners that still have their jobs and chose not to make those payments as an option, not a need. But anyway, 3.43% of the first mortgages in LA and Orange County were 60 days late. That means 96.57 were not. And then 3.59 in Riverside and San Bernardino. So, and then the good news is that we got really hit hard right at the beginning, but then we've kind of ticked up most months since in terms of having our rents paid and our mortgages paid. So the 30-day lates fell from April. They fell in April to 2.98 from 4.82. So you can see there's a trend. They get numbers for LA too. But the bottom line is that there is an economic rebound that seems to be happening as a general rule, and that's helping people pay their mortgages. Because remember, while unemployment is staggering, it's sad, and there's a lot of people out of work, most of the people out of work aren't homeowners and certainly aren't in the market to buy a home. The other thing that I've talked about many times before is there's a lot of equity in homes right now. Most homeowners have a lot of equity. They've been there long enough. Price gains have just, they've gone up so fast, so steadily now that pretty much everyone has very solid equity in their home. So there's not a lot of incentive for people to stop paying or to look at a short sale or a foreclosure. They can sell. They can sell and still take a bucket of money and walk away with that. 28% of mortgages in LA and OC and 57% in Inland Empire were underwater, quote unquote, right? So that measures a 1.2% for LA. So again, I still say, I don't buy that. I don't say they're underwater. I think they are taking advantage of opportunities they've been given with the government and industry relief programs. So I think that has definitely helped cushion things. And the big debate is, have they masked an issue? Are they just putting off the reality that we're going to have a ton of foreclosures? Well, time will tell. My personal view is no. Anyway, thanks. Have a good day.